Welcome to the dark side.
What's up, guys? We're going to take a look at ADA and how I made just shy of $8,000 going short on this trade after a massive parabolic run that we saw on ADA, going from a low of $1.01 all the way up to a high of $2.97 in a very short amount of time. Obviously, there was multiple areas to bank on short, but there was also a shitload of areas to actually get screwed over and short squeezed, which is why shorting is extremely dangerous, especially if you don't set stops and you allow these things to continually blow up. If you all of a sudden think that 220 is the top and next thing you know it's up at 3, that is a shitload of losses that you can sustain in your account, especially if you're using leverage, which is a terrible idea. It's extremely dangerous. Let's take a look at how I took advantage of ADA up near 3 whole dollar resistance and locked in about 7,900, I believe it was. ADA perpetual 7,800 on ADA on August 25th. That was yesterday, was the close trade. Today is August 26th. I actually am back short ADA again. Today, we're just gonna look at the actual trade getting in very high, upwards of $3 per share. So first of all, I don't like shorting things right at the all-time high breakout, potentially right around 225 at that resistance, the supply zone where the double candle close was there. As you can see, it did kind of peak out near that area and then saw a nice pullback, back down about 18%, decent area to potentially get short and cover near the 13 and 20 EMA, right? That's a solid trade right there. But right around all-time highs, it's extremely risky because you don't know. Things could just fucking explode after an all-time high breakout. There's no resistance and not really anything to gauge that, okay, maybe this is a good time to short because you don't know how high it can go. But the positive thing is that Bitcoin and Ethereum are not at all-time highs. So basically what I was gauging here was, again, looking at Bitcoin running into this heavy supply zone about 50K, which we could definitely gauge that we might see a massive pullback off of after a parabolic run. So judging by the fact that Bitcoin is at a major resistance level and might pull back, we can definitely gauge that ADA is probably going to pull back as well, because ADA, whatever smart contract news that they're releasing, that was kind of the reason for it breaking all-time highs. But if Bitcoin and Ethereum start pulling back heavily, ADA is not just going to keep going. Everything's going to pull back with the market. Obviously, there's going to be some outliers, but you can see when Bitcoin and Ethereum pull back, look what else is red. The entire fucking market, albeit sand. Okay, so the majority of everything is going to follow exactly what's going on with the market, unless there's some kind of random news coming out. Looking at ADA, it was at all-time high breakout over that, but gauging by the fact that Bitcoin was looking like it's potentially reversing, now I have a theory that Bitcoin's going to reverse. Then we can come up with a theory of how to trade Ethereum. One of the major parts here is that's at a major whole number, $3, right? So that's an area that we could probably think of getting in. And if we look back over here, we came back, retested, or broke out of this kind of triangular pattern here on this is the 15-minute intraday chart that I'm looking at, ran up, tested 3, then ran up again, failed to break out 3 again. At this point, I'm thinking, okay, this thing is definitely looking like it's hitting a top here. On top of that, Bitcoin is right at that freaking super heavy supply zone at 50K. I'm betting that Bitcoin's going to drop. So I'm looking at ADA at the same situation. ADA's at also a very heavy level of 3. If Bitcoin reverses, ADA's parabolic, it's going to eat shit. The panic seller is going to come in and it's going to dump. So I didn't get in right here, but I waited and it came back down. And then this spike right here on this 15-minute candle is when I started getting back in to look at a short, right? So I would have liked to get in right around here on this fail because I wanted to look at the stochastic MTM above that 40.35 mark here in the red zone. That's typically when I want to be short, is making entry short when we are above that level. That way I know on an intraday scale, it's overbought. People are buying into this spike here, but looking at the daily chart, it's an area to potentially see a nice pullback. So as soon as that started spiking back up here, I got in at about 293, I believe was my entry. Then we saw a nice big spike to the downside where I was up nicely, didn't lock in all my gains, came back up and retested right into that zone right around 293, which made me a little nervous. Obviously, it's never fun to go into a nice profit and then everything come back up right to where you entered. You're like, shit, did I just miss out on locking in these gains here? But then Bitcoin and Ethereum did finally see a massive sell-off, and this is where I started locking in partial gains. Took about 30%, 30%, 30%. I think my last exit was about 260 something on ADA on the futures contract here. So massive huge gain here on ADA without having to go super duper heavy on my position size, but we saw that big pullback of about 12.9% on ADA, about 13% off the top. So a perfect area to, one, looking at Bitcoin. Bitcoin's at a heavy supply, looking like it's got that shooting star candle, looking like a good reversal. Okay, now we can look at other plays. What other plays are kind of fitting this criteria that we can kind of set up a game plan for trading, right? And the stop on ADA would have been a breakout over highs a day. Okay, that's what I'm like, okay, maybe I'm wrong. Maybe this thing's going to keep fucking blowing past all-time highs. Maybe it's going to 4. We don't really know. But due to the fact that we had multiple spikes up towards 3 failing, I thought Bitcoin was going to crash. Got in at 293. Stop would have been, slightly above over the high a day, and then covered for profit into here. And I'm actually short again ADA right now, of which we can talk about in another video. But right now, that's it for ADA's trade. Here we go. That was $7,800. ADA, wham bam, thank you, man.
Welcome to the dark side.
Yo, what is up, fam? We got another hot trade coming in on ADA. This was a re-entry after the trade that I made where I got in up at 293, covered for a nice $7,800. Now I'm back in ADA again, currently locked in 1,000 already and still have 500 on the other position. So I went in pretty small as far as my position size due to the fact it was a secondary position on a retest of resistance, but I'm still at $1,500. Nice little profit so far. So let's take a look at what's going on and why I got back into ADA. The first initial trade was going into $3 per share, the continued failure, then a retest of that kind of resistance level, and then that crack, which was basically just me looking at Bitcoin saying, okay, Bitcoin's in this massive supply zone, shooting star candle, thing that is going to pull back. Now, what happened with Bitcoin after that? Let's get rid of all these freaking drawings here. How about that? So what was I looking at here on Bitcoin? We first saw that initial big crack to the downside on the daily chart for Bitcoin, right? That was when I made the $8,000 profit on ADA after ADA cracked off those highs from 293 down in the 270s or 260s or whatever it was. But then after that, Bitcoin ripped right down into the 13 and 20 EMA support level, which typically, as we've seen before, bounces right off either the 13 or 20 or right in below or even just slightly above that range almost every time. So at this point, I'm like, okay, what if this is the bottom, short-term bottom, and that's all we see, just like we've seen before, is a little pullback in that level and we bounce up to the upside. What happened? Bitcoin spiked right back into that level off that support. But that doesn't change the fact that there's still this massive resistance area here around 50K. So at this point, I'm still looking to get short again if we saw a spike, especially if charts start seeing those 15-minute overbought signals on the chart, of which we did see here on Bitcoin after that spike down. What happened? Bitcoin started running back up, 15-minute overbought on the charts, did see a little spike up back to about 49,000, failed over 49,000, just slammed, and now we just hit a low of 46.5 just earlier today. You can see that translating here on the daily chart. So after we bounced off the 1320 EMA, I was looking to get back short some positions, particularly ADA, because ADA was still highly overbought on the daily chart, and get short. So let's take a look at the chart on ADA. What exactly was I looking at here? Okay, so it did come back down. This is when I made that first initial run. This thing spiked back up right into that resistance, and then we kind of just traded sideways for a little bit, for a while, before there was one last little spike right here, and I believe my entry was at average entry is at 273.9, okay? So I basically got back in right around here, and I was thinking, okay, this is looking like this spiked up above over here. That was the failed breakout over those previous highs, as we can see here on ADA, right? It was looking like it was maybe trying to break out over those highs. But a lot of times when I'm have the theoretical theory of short, I'm also looking at Bitcoin for it continually pulling down. I don't look at breakouts over previous highs as, oh, that's a buy signal. I look at it as, if that fails, that's definitely a strong sell signal. So that's kind of when I started looking to get short, got in here at 273. We did spike up back over here, but we didn't break any previous highs or anything. So I was still very bearish on ADA, albeit I was a little nervous when we saw this starting to spike up, back up, okay? I get nervous all the time shorting. Shorting is so fucking stressful. I got my girlfriend with me here. She sees me, she's like, what's wrong? I'm like, I'm fucking stuck in this position short and I'm freaking the fuck out. So you're always gonna be stressed when you see things starting to spike against you. And that's another thing to note, is you're never gonna make perfect entries. Almost every time you get short, you're gonna be negative on that position because we get greedy. Sometimes we're a little bit too impatient. Sometimes we don't wait for the 15-minute overbought on stochastics, or we're an idiot and we start buying or shorting when things are down here in the green. Sudden things spike way back up because we entered like an idiot. So it's very difficult and very stressful to be shorting, but that's why I went in smaller on this trade, because it was a secondary after already the initial breakdown. And I didn't want to stress myself out too much, because a lot of times why we fuck up is because we go in too heavy. We get in too early and we go in too heavy because we get FOMO, we get emotional. We think, oh, here comes the fucking breakdown. Everything's gonna eat shit. And so we go heavy and we go in late because because we have FOMO, and then things spike against us and we stop out because we got in too late and we got in too heavy because we were trading emotionally. This one, I didn't want to have any stress. I wanted to be a little bit more stress-free, so I did a smaller position size, which is why I'm only up about $1,500. But hey, who can complain about $1,500? I can actually relax a little bit more on this trade because the position size is smaller, and I can trade it a little bit more soundly because my position size is better. Even though you want to make big gains, you might make a lot more by trading smaller because your success rate is going to be higher because you can have a better mental capacity to trade more successfully, as opposed to going in heavy, and as soon as you go into a little bit of a loss, it's actually a big loss. The percentage loss might be small, but the dollar loss might be huge, so you can't translate that up here because all you see is this big dollar loss, but you might only be down 1%. So that's why it's hard to short when you go in heavy, because it fucks with your head and it makes it harder to manage the risk and manage the trade. Sometimes you should be adding to your short, but you're thinking about stopping out because your dollar loss size is so big because you went in too heavy. So sometimes it's better to trade smaller so you can trade better, and in the long run, you're gonna have more profits and more gains because you don't fuck up because you're oversized. But that was basically what I was looking for on ADA, was a retest of these levels and then a continuation down to the daily charts 1320 EMA levels, which is about 254 and 241. Okay, so we're just tapping that level here today. I just started locking in multiple gains on ADA, took 25% off these shorts, SXP, ADA, RSR, and ADA, right? So I started locking in gains on that secondary trade for my entry about 273 down to the low of 252. Still have, about a third of the position open, locked in 2/3 already for a nice profit. But you can see this thing is coming back down. Look at these. This is a support area it's going into at about 260. So this could easily spike back up to 270. Like, that wouldn't be totally out of the question. And I would hate to see this go from a nice little trade back into a range. I'd rather lock in gains down here than potentially be able to add short to this position and recycle those profits back into a new position if it looks like things are gonna continue to drop. But it's important that you're always locking in profits as you have them. Otherwise, the fucking crypto market is so volatile. You can be in a nice profit, and then in a few hours you can be at a fucking loss just like that. So always be locking in gains. You can't win big every time. Make sure you're locking in gains every time you have it. So that's a secondary trade on ADA. All I was doing was looking at Bitcoin, okay? Looking at Bitcoin, retesting this big supply zone on 50K for a retest and then a continuation pullback. Exactly what I did on ADA. Retested in the supply resistance and then a continued pullback and got in for a nice profit there on ADA of about $1,500 currently so far.
Welcome to the dark side.
All right, guys, next trade, BZRX, which I traded for a whopping $11,600 gain, and this thing is still cracking to the downside. So let's take a look at the trade again here. All I was doing was simply looking at Ethereum, as in this was pulling back after this big sell-off day. It was ripping right back into that resistance level with a huge supply zone. So I was thinking, okay, this is gonna be a perfect opportunity to start looking for other altcoins to start shorting. Now, this didn't actually track perfectly with BZRX. As we can see, BZRX was spiking here into this 40 level. It was also spiking here into this 40 level. And we can see on Ethereum to the left side, it was actually not even in that, spiked into that level yet. It didn't start going into that level until BZRX was actually down here off the highs, and Ethereum was at that point retesting that resistance level. So this would actually be a decent level to get in, especially since right here, you can see the stochastic MTM is significantly over the 40 mark here, down here, when Ethereum was over here in this level. So this would actually be a potentially solid level to get in after that initial spike right here. You're also in at the whole number just over the 40 mark on BZRX, and there's also always that over-under whole number range that we talked about in the beginning. So this is a perfect look at BZRX, but I actually got in here initially on this big spike right here, and I believe I did add to my position when this was in the 15-minute oversold area on the stochastic MTM. So let's just take a little bit closer look at the daily chart of what we had going on here. We had this supply zone here on BZRX, and there's multiple ways you can actually draw this. This one is a little bit more confusing, but there was the factor of the whole number of 40 cents right in, because we could potentially draw the supply zone right down here, which is about 38 to 36. And the day before, it kind of looked like that, right? It's like, okay, shooting star candle, looking like a pretty big reversal right here. But there's also those extended wicks to the upside. And a lot of times in that supply zone, it typically does go all the way up to the extended wicks. And you definitely want to be cautious of that. And also with the over under at a whole number, it typically goes, so if it's 40 cents, it's very likely it could go to 43. and then crash from there, right? So that would be a much better idea. Be like, okay, just like I always say, cancel your initial trading plan. If you're looking, okay, I should short at 40, you should actually be like, okay, I'm gonna watch this thing spike over 40 into 41 to 43 and have my entries be in that zone, and then have a stop somewhere over, 42.50, somewhere up here. Like, okay, clearly this is pushing above all the supply levels here, and maybe just gonna absolutely fucking crush and go to 50, 60, right? And so you have to have those stop levels in place, and that's exactly what we saw. It just barely peaked out over 43. And I didn't get into this until I saw it fail, right? We want to see that one last spike fail over that level, and we could see that previous high break out over there and then fail. We saw significant volume coming in and then actually fail. And then I put actually an alert on the 15-minute chart if we spiked back over that 40 mark. You can see my alert here. I had a trend line here. And if you just put that trend line here like this and then click add alert, it's going to give you an alert every time it goes back over that. And you can see as soon as that went back over this level here, that was actually when Ethereum, as you can see here, was pushing back into that resistance zone, which would be a perfect area to look at Ethereum. It's like, okay, Ethereum is pushing back into a heavy supply zone. Might be a good idea to start adding or potentially getting in for the first time to some altcoins that I'm trying to short. And that's exactly what happened. As soon as that went right into that level, came right back down and saw a massive decline on Ethereum. Same exact thing happened on BZRX. I had my buy to cover at about 35 cents, which was basically me just looking at this level like, okay, where is the supply zone initially starting, which was about 35 cents, okay? And that's exactly where I covered. It did drop to a low of 31 and now actually spiking back up into that level, which is now again 35, right? So typically halts right around that support level of 35, breaks down, comes back up right into 35 again before now potentially continuing down lower. Okay, so support then becomes resistance, right? And resistance then becomes support if it breaks through it. That's basically just the quick tutorial on BZRX. Parabolic move, massive move, highly oversold on the daily, spiking into a supply zone in conjunction with Ethereum, pushing back into the supply zone here, and then finding that entry point. As we see, Ethereum right here into the supply zone, what happened? Right back into the over under 40 mark level. Daily chart looked great. Short it, get in, put a stop over the highs a day, over the supply zone, because we don't want to see this have a short squeeze and just continue to just crack us out. But again, cancel your initial trading plan. Try to be patient. If you're looking at 40 as a major resistance level, don't short it at 40. Short at 41 to 43, slightly above it. And you want to see previous highs that see a spike level. You want to see it spike again over that. Fake everybody out and then get in, right? Because so many people might have gotten short right here and then put their stop on a breakout over the high day, which is a problem because then everybody gets stopped out. And as soon as you get stopped out here, you're like, fuck, and then you don't get back in and you miss out on the trade. So it's important to look at what's going on in the general market. Don't get stopped out on one last spike. Shorting is very, very difficult. But that's the trade on BZRX. Supply zone, short, look at Ethereum, get in, get out, ensure that you're locking in your gains on the way, whether it be partial or all of it. It's very difficult because you could have been trying to short this entire thing right here, of which I did on several trades on other coins. And as soon as I would be, oh, this is the reversal, I'd be up like 5 grand. Nope, fuck, back to break even. Ah, fuck, I'm at a loss. And so that's not good. So you always want to be locking in gains on the way up as soon as you have them. No matter what, at least be locking in partial gains to ensure profits because you never know when it's going to be the actual top.
Welcome to the dark side.
All right, guys, next up trade is DOT for about $1,000 loss. Wasn't the most ideal setup. It was more so me looking at Bitcoin to potentially eat shit. And Bitcoin and Ethereum both ate shit, but DOT actually ripped to the upside and then stopped me out. This is just a good example of using stops to protect yourself before losses turn into big losses. Extremely important. If you're not using stop losses when you're shorting, you're an idiot, you're gonna blow up your account, and that's not a good thing. So, looking at what was happening here was that first initial dump on DOT, along with the market, right? Bitcoin, that first initial dump, and then bounce into 13 and 20 EMA zone, and then looking for the secondary dump. And that's exactly what I was looking for on DOT. First initial dump, bounce into a resistance level, and then the secondary dump, of which DOT didn't do that. DOT had a secondary run to new highs again of this recent trend. So looking at like the 1 hour chart here, on DOT, we had that first initial spike up, basically kind of into this supply zone right around here, of which what I was watching. We kind of have this supply zone starting to build, like right, supply and demand here, got some supply right here, spiked back into it right here, then reversed. And then what I was looking at was basically this nasty candle right here, right? Spiking into the supply level here and completely failing. And then at this same time right here, Bitcoin was looking like it was potentially also getting ready to, fail right here and then continually dump down into the market, which what I was looking for was the test of the 1320 and then a continual dump. And at that point, that's kind of what we were seeing on DOT was this failed spike right here, right into that supply zone again. Spike into that level, fail, start to spike down, and then let's look at my entries. So DOT, my open shorts were about 3167, 3168, 3209, 3209, 3209, right? So 3160s to 3209, which was 3260s, which was me getting in right here on the failed spike right around here. Like, okay, failed spike, this could easily just eat shit right here. And then I got in, I think again about right here, 3209, hoping to see that we're just gonna have a secondary little spike in this level and then completely eat shit. And I had my stop if we broke out over this spike high, which was about 3303, which I got stopped out right here. I think my exit's on 3304, 3305. So lost 950 bucks on that. And then so 3305 stopped out right here. And then this thing went all the way up to 38, right? And at that point, that would have been like a 4 or 5 grand loss potential, as opposed to only losing 1,000. I didn't want to see myself end up in that situation. And then we just had madness, crazy volatility, all the way up here, spiking down, all the way up here, spiking down. Because we also saw this crazy spike on fucking Bitcoin going from, 44,000 to 46.8, then all of a sudden instantly down to 43. That was crazy, all within a few hours. So easy to get stopped out right there. But on DOT, I was looking for the spike into the resistance level and the secondary dip. That didn't happen. Stopped out, $1,000 loss. And now who knows what's going to happen here. I'm not really interested in shorting DOT again, even though we did fail that spike and then now coming back down. There's just a lot of volatility. We don't have kind of a clear-cut entry for anything on DOT, so not necessarily a trade. I was mostly just looking for that first initial spike, bounce into resistance, and then the secondary sell-off here, which didn't happen. It still might happen, but as of right now, I don't like the setup. Took my loss, moved on, tried to find a better situation. So that was me taking a loss and using a stop loss to minimize going from a $1,000 loss to a potential $5,000 to $6,000, $4,000 loss, whatever that would have been.
Welcome to the dark side.
All right, guys, next up, the trade of the day is a $34,000 profit on none other than Ethereum. Wild trade. I was significantly heavier than usual in this trade. I shorted just shy of about $1 million worth of Ethereum, but Ethereum moves in much smaller moves than a lot of these coins. And so I was looking for like a 10% move to take advantage of, which would be a 6-figure trade. I was basically shooting for 6 figures. I almost got there. I think at the peak, it was about like $70,000 to $80,000 profit. And I ended up closing it just today for $34,000. So a little bit disappointed. It didn't get the massive pullback or a big sell-off that I was hoping for. It still might do it, we don't know, but as of right now, settling for $34,000. So let's just take a look at the daily chart. But what I was looking for here on Ethereum, and essentially prior to this bounce back here that you can see, as we know from the Krypton course, the 13, 20, and 9 EMA areas are usually an area where we're going to bounce after the trend is formed, as we saw the bounce off the 1320 area completely throughout this trend, and now it's building a new trend, bouncing around that level. So it definitely was a good area to lock in profits between the 13 and 20 EMA. We can see it bounce perfectly on the daily chart off this top of which I was shorting in here. But if we zoom in, basically where I got short was looked for the supply zone, which we can draw basically right here on the supply zone, basically in this range with a peak supply zone of the upper range. As you can see, it just barely popped over it and then failed to have that breakout and then failed right here. And that was when I started getting short after it broke out over that level and then failed and then formed this bearish shooting star candle, which basically at that time looked like this. I was like, okay, this is definitely looking bearish. We just did like about a 30-40% run on Ethereum. So definitely time for a potential pullback. And while Bitcoin was ripping through all these levels, Ethereum was just pretty stagnant. Ethereum wasn't jumping. Altcoins weren't jumping. The only thing that was moving was Bitcoin. And we saw that basically on Bitcoin dominance chart, BTC.D on TradingView. This basically just shows how much of the market cap of crypto is being accelerated by Bitcoin as opposed to altcoins. So we can see Bitcoin was just on a run and the altcoins were not really doing anything. So the market cap of Bitcoin was accelerating above all the altcoins. Bitcoin was the only thing really moving after an extended period. So while Bitcoin was continually going up heavily, Ethereum was just kind of stagnant in this range right around this big supply zone. And that's where I got short. You can see my tweet back here, how to never get any sleep, drop $1 million USDT short on ETH, bear mode, okay? So this is stressful. You could see my entry here and a market stop at 36.62. That was about an $8,000 potential loss with my profit target. At this time, it was $29.50. I think that would have been about $130,000, $150,000 profit on this. Obviously, we never got down there. As of right now, I'm already out of the trade, but I should. If I would have made the perfect trade, this would have been the area to lock in profits, which the price is currently 34.14. I was hoping we saw a continuation and breakdown of the 13 and 20 EMA trends, and then a continued pullback into the 3,000, low 3,000 zone, which I would have made, you know, between or somewhere around 6 figures, which was kind of my goal on the trade. Unfortunately, the 13 and 20 held strongly, as we can see, because I did get short right around here as we started to roll over. We also were pretty heavily overbought on the daily chart, and then we came right down into the 9, 13, and 20, as well as kind of bounced right off the 50-day moving average, right? So this was a heavy area of support right in this range off of all those EMAs, and as well as this area right here from this previous range back here where we continually topped out, right? We basically kind of tapped the top of that support level here, which was also the lowest that we went. It was basically tapping perfectly off the 20-day moving average on the daily chart, which again is usually a dip buy area, as well as if you're long, a great area to kind of like, okay, if this reverses over that, that's not looking good, or to add your position long, or if you're short off of a top like we were here, an area to potentially lock in profits. So after we saw that first big down day, I was thinking, okay, momentum's back in our favor. This thing could dump potentially like it did this previous time. And then the next day it comes around and just boom, all of a sudden, next thing you know, we are engulfed this whole candle, bullish engulfing, and then potentially looking like we're gonna rip. I almost stopped out of this position for almost break even as my entry, I think, was 36.30 here on Ethereum, which is pretty solid. As you can see, right at the previous peak, got in short right at that previous peak before this rolling over. So I was pretty close. You can see the high here was 36.20. 36.19, which was, you know, up about 70, 80 grand. And then all of a sudden, instantly, that profit was gone, as I tweeted right back here. I said that 75K open profit disappeared real quick, because as we've seen many times before, when crypto's in bull run, any dips are just smashed and this all of a sudden just ripped to the upside. So you gotta be locking in profits along the way. And after this dip that just ripped me wide open, I was like, okay, I can't fuck around. I need to start locking in profits. We don't know what's gonna happen. So the next day we saw another huge bearish engulfing, but then bounced back up. But I did lock in some profits down around low 3400s. And then again, I started locking in profits again, 3400s that I was alerting in the Telegram group. And then we saw a massive run. And unfortunately, when you do lock in profits, using KuCoin, what I'm using now, a lot of times if you have a stop in place but you want to lock in a partial profit, it'll say, do you really want to cancel your stop losses and then lock in this profit? Because it cancels all your stop losses. So I said yes, and then I forgot to put in the freaking stop again. So I would have stopped out for an open secondary profit right around here. I had my stop right around 35.50 or 35.60 or so, right around here. And then as soon as I locked in profits down here, my stop loss got deleted. And so I locked in about 20 something thousand or 30 something thousand. I think I had 30,000 locked in, and then my stop loss got canceled, and I was it was late at night and I forgot to put my stop loss back in. And I woke up this morning and this was ripping, and I locked in like the last like $2,000 in profit when it should have been about $12,000 in profit if I would have re-put my stop in there, which sucks. And now we're back up to basically retesting those previous highs where I initially got short, right? So we did have multiple opportunities to lock in profits. I still was able to pull $34,000 in profit. So I said, didn't get the 6-figure trade I was hoping for, ETH short, but I'm settling for 34,000 was the close profit with trading fees, funding fees of 4,500 and a trading fee of 1,000. So it cost me $5,500 to trade $1 million short, but it walked away with, I think the trading P&L was 30,000 at the end of the day. So I can't really complain. My new whip, BMW 9T 1200cc, fucking beast. This is before it got customized, so I don't know what it's gonna look like when it's finished. But overall, you know, to the T, worked out perfectly, as we have talked about how Decrypton work, as well as how does Krypton work, right? So on the daily chart here, understanding that we know that the 13 and 20 are high levels of support, right? So bounce perfectly up to 1320 here, and also getting short or even selling your long positions into a supply zone that we have here on the top that we had over here perfectly, okay? So got in here, short, covered down here in this range. It was so volatile. This is not fun. This is a very stressful trade, but still pulled off, lock in partial profits down near the 13 and 20 EMAs, and then got stopped out of my last position for a small profit. And now we don't really know what's gonna happen here, okay? Right now, it's still consolidating, but we didn't break this peak, which is we didn't break the previous all-time high here. Now we have a lower high and then a lower high again. Is this a bearish trend that's forming? It could possibly be. We still don't know what's gonna happen on Ethereum, but as of right now, we continually have lower highs, which does indicate a potential bearish trend in the making, or, you know, a wedge pattern that eventually breaks out to the upside. If this breaks out to the upside of this trend and this wedge here, that would be the indication of potential all-time high rip on Ethereum. But as of right now, took advantage of that short-term trade, right into the supply zone, got short, covered into the 13 and 20 EMAs. I was hoping to see the 1320 EMA break down and this bearish trend continue, But it's hard to fuck with the bulls sometimes. When they got their fucking circle jerk groups out, things squeeze quickly and shorts get fucked. So that's why it's always important to have your stops in place. Never, ever don't use stop loss and go to sleep when you're shorting crypto. But that's the $34,000 trade.
Welcome to the dark side.
All right, guys, next up is FTM, of which I actually still have a position open as I was getting short FTM initially at 168 with the futures account. You can see the realized profit so far is 2,700 and I still have an unrealized profit of 629. So we're still open on the position FTM. I have a stop if this starts breaking out over 134. My entry average 166 on FTM. My entry is 168, 167, 159. And then I started covering multiple times, 149, 138, 128. Right? So continually taking profits on the way down between 149, 138, 128. Because you don't know, right? We first came back down, started hitting the 13 and 20 EMA between 137 and now 126. Now this could easily be an area where this thing bounces and then spikes back up. So I don't want to, miss out on the opportunity of locking in these gains at a high probability bounce area. But looking at the daily chart, we're still very overbought. Right? This could easily needs to come back down into this range for it to be like an extremely good dip buy or a more probable dip buy. But due to the fact it's still in a bull trend here, this could be a highly probable area of like, okay, if I don't lock in my profits here, or at least most of my profits, I could be regretting that because it could spike 20, 30% right back up to my entry price at about 167, which would not be good or fun. It's always important to be locking in profits. But let's just take a look at the analysis. This was a little bit different than like Sol, SOL, which, was an over-under short at a whole number. This didn't get to it. It just was just shy of the whole number at about $2 per coin. So this never got to break out over the whole number. It doesn't always work out that way, right? You might be sitting here, of which I was hopefully trying to wait patiently for it to spike over $2. As I said in the Telegram group, when I was saying a lot of times parabolic moves will run into a whole number, spike over it, then dump, called the over-under strategy. So the sense of Sol, that was 2 to 230, potential dump. FTM, it would be $2 to 230, and then potential dump. Sol never did that, okay? But what it did do was have this big spike up and fail over that previous spike high here. Again, this is an all-time high breakout. Very dangerous trade because we don't know how high it's going to run. Right, multiple times throughout this entire session, even breaking out over one was looking like a potential short. And then there's massive volatility here. Massive volatility, very dangerous, both long and short, easily to get stopped out, especially if you're trading heavy. So I went in with a relatively small position, but we did see that heavy spike. I was also, this was the day when Bitcoin and Ethereum totally ate shit. And we saw this massive day on selling. That was September 7th on FTM was here, right? That was that massive volatility day. And then Phantom continued to run for 2 days after that huge massive dump. And then basically I started getting again because it looked like I was hoping to see that secondary dump after testing the 13 and 20 EMA on Bitcoin and Ethereum, and then potentially seeing a continued pullback on the charts here. FTM and Sol both were losing steam at this point. It was only a matter of time before we actually saw some selling pressure, especially when Bitcoin and Ethereum saw the dump. That definitely made people more on edge, be like, okay, this is getting a little too scary up here. And we saw that spike up. And then after seeing the spike up, now I was looking for, okay, we have these two big spikes to the upside. Candle closed bearishly. Even though it was green, we had these massive extended candle to the upside, which is a shooting star, which is bearish. Now I was looking for spikes into an overbought territory on an intraday chart to make my entry on FTM. So just taking a look at the 15-minute here on FTM. This was the initial run up right here. And then I was looking for another spike and a lot of times a fake breakout, right? So right here, we saw this false breakout on FTM. And at this point, I'm thinking, okay, is it going to run up? Maybe. Nope. Failed breakout, and that's where I started getting in at 167 was my average entry here. So I believe was around possibly right here, looking like about 167. Like, okay, failed that breakout. Now if we break down below this channel, we could definitely see a dump here, right? This was kind of the main opportunity, right? I had an alert set right here. If we reached over the 40 mark on the stochastic MTM, it never hit that, but I was watching, and at this point, I was also when I was entering into SOL. So like, okay, if Sol eats shit, FTM is also going to eat shit. So I was initially going in Sol first, and then I saw the same pattern forming up on FTM. So I wanted to get a piece of this action as well if that happened. And then that channel broke down, and then that's when we saw that nice crash here on FTM. And then we saw these pretty big spikes to the upside. Now, if I was in super heavy on this position, I might have stopped out and got spooked on these positions. But due that I had a smaller position, I allowed a little more breathing room. It was way less stressful and allowed me to actually trade it more soundly than if I had $100,000 in this position. Instead, I had about $15,000 in this position and still was able to make a nice trade on FTM, which we now are continually crashing down here. As you can see, look at this. This volatility is crazy, right? Easily get stopped out on these trades. Potential stop out again, I was almost negative on this position, right? I was averaging at 167, looked nice, boom, retested that area, came back down, now it's at 129. And again, my exits on this were between 149, 128, 138, right? So looking at the chart, I think I initially took some profits here on this first initial spike, came back up, and then I started taking in more gains down here, which we're looking at the daily chart, right around the 13 and 20 EMA, are both awesome areas to potentially get out of that position for a nice profit, you know, then potentially maybe enter reshort if things bounce, or maybe even pick up a small long position to trade the bounce here on FTM. But right now, I still have a position open here, just 1,688 coins open on FTM still, just in case the market, because if we look at Bitcoin, I'm still looking for a secondary dump on Bitcoin, right? We're now basically forming up this channel here on Bitcoin. We're still below the 13 and 20 EMA. You can see the 50-day moving average is broken. Now, that definitely is a signal that we could come back down, continually cracking. So that's what I'm looking for. And if that happens, FTM and a lot of other coins are going to continue to eat shit as well. So I still have some exposure short on FTM, but I've covered about 60 to 75% of my gain here at this pretty predominant area where we could see a bounce at the 1320. So that's the trade on FTM. Going in at 167, my stop would have been, you know, if it broke out over that previous high, which was about 177. So you always need to have stops. You can never not have a stop. When I tell people, when I'm alerting in my Wolf Alert stuff, I don't want to tell anybody what my stops are, because then a lot of people are going to be competing for the same stops. But for the most part, you have to have your stop in a range of over an area of, okay, I don't want to lose a whole lot of money here. And so it needs to be like max 5% over your entry price, right? You don't want to allow a 20% loss potential, which is why it's important to be looking at the intraday chart, be like, okay, where are the spikes? I either want to get in on an intraday spike or on a failed breakout, right? So where did I get in on here? You know, there was this breakout intraday looking like, okay, it's going to break out. Nope. Okay, so that's a false breakout, bear trap. So that would have been my stop, would have been like, okay, if this breaks out over 177-ish, that would be my stop level on FTM. And then it came back up, retested, and this continually rode the trend down. Super important to have stops in place. The problem is you're gonna get stopped out a lot, and you might have to re-enter. But there's nothing worse than not putting a stop in, and you're short at fucking $1 or 90 cents, and then up at $2, and that blew up your entire account. So you might as well have a relatively tight stop and then have the potential to re-enter again later, as opposed to being like, well, maybe I'll just go out to have some breathing room, and it goes from $1 to fucking $2 in a week, and you're fucked. We don't want to allow that to happen. You want to have tight stops. Sometimes when you're shorting, you might have to try 3 times before you actually nail the actual trade that you're trying to get into. So that's a trade on FTM. Nice profit so far. Still open position of $600. Realized profit of $2,600. 2,700.
Welcome to the dark side.
What is up, guys? Next trade we're gonna look at is Ocean, O-C-E-A-N. Similar setup that we've been looking at here, tracking ETH as well. When we look at Ethereum on the daily, same exact pattern that we're looking at, that spike into that zone after this massive run on Ethereum, which was 94%. Every time Ethereum's made a 70 to 90 to 150% move, it's always followed up by a 15 to 30% pullback. As of right now, Ethereum is only down a low of about 11%, right? But what happened? We have seen an 11% pullback, which resulted in everything else eating shit. So when we compare it to the same exact chart on Ocean here, first of all, we're looking at a supply zone on Ocean. Over here, this was kind of like a big opening and closing price candle. So we have a bit of a supply zone here on Ocean that we can kind of gauge, like, okay, where can be a potential entry, right? And I didn't start shorting this until after I saw this bearish shooting star candle. And then what we've been seeing a lot of is bearish shooting stars followed up by even more buying afterwards. But we're also in this major level of Ethereum pushing into that level, which we can see when we line up the crosshairs on both charts. What happened? Ethereum did have that spike after that big sell-off here. So as soon as we had that big sell-off candle here on Ethereum, all of a sudden, next thing you know, we had a big white candle reaching back up into that resistance zone. Looking at the 30-minute chart here, we can see that price action just rallying right up into that resistance zone. And once we get in there, that's a good indication of, okay, maybe we should start getting short either Ethereum or other altcoins that look like might have a bigger return for us because they're going to move bigger in percentage gains for us than Ethereum would. And that's exactly what we saw on Ocean, as initially I did get in a little early here. I actually got in on Ocean when it looked like it was rolling over, right? I thought it was rolling over. And so my initial price entry was at 75, which wasn't very good. And also that led to me getting, kind of screwed on my entry and average fill price and got me way more closer to stopping out here on Ocean due to the fact that by the time it's all the way up here, I was already negative 5%. Like, fuck, is this thing gonna keep ripping? We were looking at the daily chart on Ocean. At this point, when price is up here, we had a massive white candle just ripping to the upside, breaking out over those previous closing prices. But we did also have those extended candles, right? And we don't really know the supply and demand zone official ranges until the day has succeeded and we know, okay, did it pull back off that level or not? Because intraday, while we're in the middle of that, we might have this massive spike up to $1 and come back down. We don't know. That's why supply and demand zones are in ranges and we don't really know, and why we always want to potentially cancel our initial trading plan and be like, okay, this is stupid. Maybe I should, wherever my stop is now, I should move it there, move my entry to my stop, and then place a new stop up higher, so we don't think like everybody else, right? We don't want to think just like everybody else. They be like, oh, here's the resistance level, so I'm going to put my stop right above it. That's what everybody thinks. So we don't want to think like that. We want to think outside the box and be a little bit more savvy in our entries and exits, because there's always that one last spike to the upside that stops everybody out before things start reversing, especially when you're going in a short position or even buying a dip. Looking at the intraday chart on Ocean here, first initial entry was about 75, and then I actually got in again because at this point, when we were breaking out over this all-time high right here, I was like, okay, we might be having that one last spike over this high right here, and then we're failing also the whole number of 80, a whole number of 10, 80, 70, 60, 90, $1. Those are all significant psychological barriers. And so we failed over 80, and I actually added on that failure to my position at about 79. And then we saw one last spike to the upside. I was like, fuck. Like at this point, as I was breaking out over here, I was pretty close to getting very nervous about my trade. I was down about $5,000 on this trade at that point. Like, shit, maybe I should stop out here. And I was close. And just like I should have canceled my trading plan to go right here, and I should have waited and had my first entry here, and then had my second entry up here instead of 1, 2, 3, right? So I put myself at much more risk by jumping the gun a little bit too early on this shorting position. But at that point, when we were spiking into these highs, Ethereum was also at this point, and this actually lagged a little bit, right? So we are only right here on Ethereum, right? And I should have been potentially a little bit more patient to wait for this spike right here, and then been a little bit more confirmed about, okay, 80 cents is failing. Now we can actually drop. As soon as that failed right here, that's when we saw the official breakdown over here on Ocean. And at that point, I had my buy to cover at about 75 cents just to exit out of the trade. I was already down 5,000. So psychologically, I wasn't feeling very good on the trade. I just wanted to capitalize on it. And I think I made about 11,000 on the actual trade on Ocean, because I was in pretty significantly. I had over $100,000 position. As we can see, where did it go right into? It went right into 13 EMA support on the daily chart, which is typical area to buy the bounce. And wherever you can see, this thing has been trending, bouncing into that level, bounce, bounce, bounce. And this again came right into that level bounce. So that would typically be an area also right around 70 cents, another whole number where you can buy to cover. I wanted to be a little bit more safer about my buy to cover here. I just wanted to ensure, okay, $10,000, I'll fucking take it. That sounds great. On this position, $10,000 to $11,000 it was on this trade. So right into basically just shorting into a supply zone, guys. Managing the risk, getting out at a support level. Wham bam, thank you, man. And most importantly, tracking Ethereum or Bitcoin, depends on which one you want to follow the most, but similar pattern on Bitcoin, spiking into a resistance before it cracked. It kind of depends. Lately, I've been tracking Ethereum a little bit more than Bitcoin, have an association with my altcoins. Same exact pattern over and over again, guys. Look for parabolic moves into a supply zone, short into the supply zone, cancel your trading plan. Wherever you think you should start shorting, or if you have your stop loss, typically put your new entry where your stop loss is, and then rework the trading plan from there. Because typically there's always one last spike. And you're like, shit, why am I in so early? And sometimes our FOMO and our impatience gets the best of us, and it's better to have patience, especially when you're shorting, and wait for it to get a little higher. But anyways, that's the trade on Ocean. $10,000 or $11,000. I'm not exactly sure. Realized profit $10,600 on Ocean. Weird detail. But anyways, guys, that's the profit on Ocean. Boom, done. Give me that cash.
Welcome to the dark side.
All right, guys, next trade is Ocean, which we traded for a solid $6,900. This one was also a bit of a crazy trade. I thought it was topping out here in the 80-cent range as we had this supply zone that we could draw on this kind of reversal area where these multiple closing and opening prices, and this kind of solid bar here on Ocean spiked several times above it and then just absolutely shredded through that level right into the next supply zone, which we can draw by basically, what you want to look at is essentially where is the opening and closing of a potential reversal candle right here. But when we do see these extended spikes, we a lot of times see those spikes and the ranges of the price action go right into the upper level of those spikes as well. It was kind of just like, okay, we have this doji here, we have this candle with the opening and closing of the same day price here, the opening and closing of the same price here. Those are kind of key levels of like, okay, that's a pretty significant area that we can start drawing a supply zone. Is it perfect? No, it's never perfect. Nothing is perfect in technical analysis, but it gives us kind of a baseline area to look at. And when I drew those lines, look exactly what happened here on Ocean on the daily chart. Went right into that level, peaked out right at that previous high of the supply candle, exactly at the same price, 114, before absolutely turning and flipping over, looking at the daily chart here. And I actually did trade a small scalp on this. I got in, I covered near $1 getting in up here, but it was only about $1,500, so I was trading extremely small. The bigger trade that we're gonna talk about right now was me getting in on a retest of these supply zones here in that range, right? So where I got in for the second one, that turned into a $7,000 trade, was me entering in about 98, 99, and about $1.01 before this thing absolutely just opened the floodgates. Everything came and ate shit. And it was just a similar situation, guys. Looking at Bitcoin, Ethereum, what are they doing? Are they looking like they're at a potential reversal area? Yep, they were. Looking like a potential reversal area here on Bitcoin, trading the supply zone on Bitcoin, and is transferring over that theory into altcoins. And what are they doing, right? And Ocean was another one that had gone parabolic, had a nice area where we can draw some supply to kind of gauge to see what's going on. And then I didn't get in exactly right in this range when I wanted to for the big trade. I got in on a secondary push after we saw these multiple doji candles, which were definitely signs of a reversal and indecision on this trade. And looking here at the intraday chart, what was happening? Kept retesting right around $1, but then failing. And then we started retesting again, right up into this level, which was, okay, we're testing this level again, but we have these multiple spikes and highs here, which kind of give this nice level of resistance to try to short into, and a breakout above that level. And we also have this massive spike here, which is just a big zone of failure, right? And so that was kind of like, okay, it failed that zone. Prices haven't been up there. People don't want to buy up there. It's too high. Also, the fact that Bitcoin's at 50K, people are nervous. People don't want to buy here. It's a nerve-wracking area to buy. And it broke out slightly over. But a lot of times, these are just bear traps or bull traps. People think this is, it's the breakout. No, it's not. You freaking idiot, okay? This is when everybody starts selling and the pros get short and take advantage of going short. So a lot of times, just like this broke out over that previous high, nope, fail, coming back down. This one broke over this high. What happened? Nope, fail, come back down. Okay, so I didn't stop out when I saw it break out over highs a day here. My stops would have been upwards of a 105 to 107 up here, potentially up here. But I definitely did not want to see it continually spike in this range, potentially go all the way back up and maybe set a new high. But I wanted to see it fail those multiple two highs, maybe spike over slightly, which is why you never want to put your stop just right over the top. Because a lot of times when you see it spike over these previous highs, it's just a fake out. And then that's where you should get short. And then you see the massive panic selling. Just as I taught in FUS 4 X3, the stock trading short course, it's called the FU breakdown. I used to trade all these F1 flag pattern breakouts, but then they stopped working. They would break out for a second and then flip and just absolutely eat shit. So it kind of turned, I call it the FU, because it was a fuck you pattern. All the bulls thought they're buying into a breakout. Next thing you know, everyone's shorting it and selling it in panic selling. So all these people that bought this breakout here start panic selling, like, oh fuck, it's not working. And then all this selling pressure comes in, okay? So we can take advantage of that going short. And that's exactly what I did here on Ocean. Started building a position from about, I believe it was about 99 actually to $1 per coin on this trade. And then just boom, right? Started covering into all this area on Ocean for $6,900 profit on Ocean. And it was basically just me shorting into this range, right into this range where it just kept being at $1, all right? And also you have to consider the fact that $1 is a huge area of either supply or demand, right? Because it's a whole number. So it failed to hold over $1. Came back up here, failed to break it over $1. Second day in a row, failed to break out over $1. Third day in a row, still trying, but the fact that Bitcoin is still right at 50K and failing to break out over that, my theory of Bitcoin holding as a big level of resistance, I didn't think that Ocean was going to do it. So I got short Ocean due to the fact that I thought Bitcoin was going to dump. And if Bitcoin is going to dump, everything's going to dump. It's one big choreographed dance. What's Bitcoin and Ethereum going to do? Make a theoretical theory of what you might think is going to happen and then translate that into altcoins because they move faster and you can make more money. Okay, so that's what I did on Ocean, was literally just looking at this price going right in that level. And I even said in the Telegram group, here I said, way too many 1 hour bars on Ocean going in here. Our candles. Look at this thing. This is when I first got initially short. Went from 80 up into a 111, and it was going into that supply zone that we're looking at here between 104 and 114, right? And it was at 111 when I posted that. I was like, listen, guys, this just, it's not sustainable. It's in this massive supply zone. Bitcoin's at fucking 50K up here. This shit's gonna tank. Let's get ready to put a potential short on this position, pull it back to the 13 and 20 EMA, lock in our gains, right? And so that's exactly what I did on Ocean. And most importantly was I was looking at the 15-minute for entry. Again, I don't like entering short unless on the 15-minute chart we're overbought on the stochastic MTM indicator, okay? And so when I was buying in or shorting into this at 99 to $1, we were overbought in that range, right? But if you think you're going to start getting short because you think it's about to break down, of which I was potentially thinking this was going to break down right here because we broke down the flag lows, but no. When you try to short into a level when the stochastic MTM is in green, you're going to get snapped, okay? Things are going to bounce. There's lots of big intraday ranges in crypto trading. So when you're trying to short, never look at the 15-minute chart and see that it's in the green area because you think it's going to break down and it's absolutely eat shit, right? Typically, it doesn't happen. You can see at this time, it did. It did break down and saw that continuation. But you're playing with fire because if you do get short right here, what can happen? All of a sudden, this thing spikes and you're, rather than being like, okay, I need to be entering up here, you're looking to get stopped out because you entered down here like a fucking sheep and you're at a massive loss when it's at here, when it's in a prime level to get short for this actual move. Okay, so always be looking at the 15-minute chart, looking at the stochastic MTM, and only get short when you're in these ranges over the highs of 40 on stochastic MTM. And you also be looking to take profits when we're in the green zone down here. So that's basically just the trade on Ocean. Look for supply zones, look for parabolic moves. Look at what Bitcoin's doing. Is Bitcoin looking at its supply zone to potential reverse? Translate that into altcoins.
Welcome to the dark side.
All right, guys. Next trade is RSR, which I lost about $5,000 on, and then I just made about 3,000 or so on. Basically lost about $2,000. This has been a crazy trade. I actually traded this multiple times in the supply zone initially, right here, shorting this, shorting it, longing it, shorting it, and this was so stressful in this area right here where I would be like up 20 grand or down 20 grand on RSR, but those are for another video. Right now, we're gonna talk about what just happened on RSR, which was, unfortunate because I did get short on this position. We saw this big spike up and then start selling off, and then I got short again as we started retesting this area. Now, here's the problem with me doing that. It's a difficult thing because I was looking at Bitcoin, obviously, Bitcoin in the supply zone. If Bitcoin reverses, RSR is probably gonna reverse. But at the time, Bitcoin was in the supply zone and seeing these spikes, of which was also spiking up altcoins. When we saw these spikes on Bitcoin, some of these altcoins would spike. And for some reason, this was almost tied to SXP. When SXP was seeing this massive spike right here, RSR was also seeing this massive spike. So I don't know if they're in the same space or some other piece of news that I don't know about probably was also influencing this move, because we saw this massive spike here, and all of a sudden we saw another massive spike, both on the huge volume, 100 million shares here, okay, or coins that were traded. Now, the problem is that there was no supply zone for me to be shorting into. So the only real thing for the reversal when I was getting short here was the fact that Bitcoin might reverse, okay, because Bitcoin was in the reversal phase. But when we look at RSR, this was kind of in between 0.04 and the next supply zone about 0.06, right? So I was like in limbo. When you're in the in limbo phase, it's not the best time to short. You're playing with fire. It's not the best time to buy. It's not the best time to short. You don't know what's going to happen in this range. There's no supply and demand data here to tell you that here's a good area to buy or here's a good area to short. You're in the middle ground, in the gray area. And so I got short there, and I got fucking fucked for a $5,000 loss because I got short. Then we saw one last spike over the top. I was like, okay, there's the one last spike over the top here. We're good. Failed to break out. So now we're good. This thing's going to eat shit. This thing is going to eat shit. And then, whoom, huge spike over the top. And at this point, I'm like, okay, shit. Okay, this thing could just go right from here where I saw this spike up, which was also the same time SXP was spiking up. And so the next supply zone was between 0.064 and 7 cents, and I did not want to see this spike all the way into that zone. I would be down for negative 15 grand, negative 20 grand, potentially up here, when I should just potentially stop out right here. And unfortunately, Bitcoin then did see a lot of selling pressure, and this thing completely reversed. I ate that 5K loss, but I was also scared of this happening to see it push back up into that level, because that was the supply zone. So I was playing with fire by getting short when there was no supply zone to base my trade off of on this chart. The best thing you can do is follow what's happening with ETH and Bitcoin, and then find charts that also are kind of mimicking that, where you do have supply zones. Okay, now like SXP, right? There was supply zones in conjunction with what was happening with Bitcoin. RSR, the supply zone was still pretty far away. And so this thing could easily spike up and just either shorts get squeezed or people buying up because they're hoping it goes up into that level. So I did get stopped out on that level, but I did just get re-short RSR for a little bit of a comeback trade, of which I was a little skeptical about. But the thing that happened here was we did see these multiple spikes afterwards. And now that gave us a lot of supply here, a lot of resistance where prices failed. In addition to that, Bitcoin had pulled back off the 50K level. So now I was a little bit more comfortable shorting RSR, because we did see that failure right here. That shooting star candle failed. Then we saw another spike. Then I saw this. You can see I had my alert set right here. If this got back over 40 on the stochastic MTM, and that's when I started getting short right here on RSR. I actually just covered my position. You can see my buy average executed 31,000 shares multiple times, covering for profits at 0.52, 0.561. I think it was about over 3,000, maybe even 4,000. I don't see the close for Binance. Doesn't show the close as it does here on like KuCoin, but nice trade profit here on SXP, or not SXP, sorry, I got so many tickers in my brain, it's hard to remember which is which. But when Bitcoin ate shit, so did RSR, and that was all I was trying to do, was looking at RSR on the intraday scale, spiking back into supply zones after the failure, waiting for the stochastic MTM over 40, get short, stops somewhere over these highs here, because I don't want to see this continually run up. But this is a very bearish candle, and then it failed. You can see again, look at this last spike on the 15th. A lot of people are probably like, oh, this is the breakout. This is the breakout. Nope, wrong. Reverse, flip the switch. And the only reason I'm confident in that is because Bitcoin was retesting the supply zone where I thought it was going to potentially re-pull back. And now I just covered most of my profits because we're back at the 13 and 20 EMA on here, which has been typically an area where it's bounced heavily every time. But at some point, this trend is going to reverse, and we can definitely see a nice pullback, maybe even lower after this breaks. But right now, we saw, you look at the intraday 15, we've been sunk under 40 here for quite some time, so we could easily see a pullback, basically giving back all my gains. And I don't want that to happen. So right now, just locking in my about 3,000, maybe 3,000 to 4,000. I'm not exactly sure how much it was, but at the last time I checked, I was at 2,500 on the secondary position, and I'd already locked in partial at 0.52. So overall, great trade on RSR on the secondary, but I still did lose about 2,500 because I got greedy. And I didn't wait for a supply zone, and I started shorting up here when the supply zone was, still pretty far away. And I was just thinking, okay, Bitcoin's reversing, this will do it. I got stopped out. There was still 17% more to go. It could have been a disastrous trade. And fortunately, I was able to recover half my loss here, and I'm still looking for more trades on RSR.
Welcome to the dark side.
All right, guys, next trade is short SRM, which is actually still an open trade. That's actually been nice, but I did trade small again on this one because it was potentially breaking all-time highs, but market was looking ready to flip. In addition to this not being extended over the all-time high, it had not breaking out. It was breaking out, trying to break out, yet failed. So initially, there was this first spike right here, which failed to break out over the all-time high. So at this point, similar to my previous trade on Sol, where there had that open in a closed bar candle, meaning that the day was done, we are on to the next candle with a failure spike over the all-time high. In the case of Sol, right, we had this closure candle here, which was definitely bearish into the over-under. On SRM, we had this bearish candle right here, over-under, even though it went much higher, all the way up to 1390s, right? So this wasn't the most precise over-under of a whole number here, 13, all the way up to the next whole number, 14. So that wasn't very significant. Mostly the significant thing was a shooting star candle. Basically, a shooting star candle is just a small body candle with a large extended upper wick, which is a potential sign of a reversal. So at this point, what I'm looking for is more spikes into this now resistance level, and also the whole number at 13 area, which is also the high spike here and the high spike here of this candle and this candle. That's why I drew the kind of supply zone here of resistance right around that range of 1277 to 1318 on SRM. So at this point, what I was looking for was overbought areas on the stochastic RSI in that range of 1277 to 1316 or so. Looking at the intraday chart, what I wanted to look at here was a overbought signal into that range. And that's exactly what we saw right here, guys. All right, we spiked all the way down to 1170s, and then we had this spike back up, then hit the overbought area on the stochastic MTM over the 40 mark. So you can see my entries here on SRM, 1286, 1287, 1278, to 1277. So you can see these were my orders being filled. This wasn't me going in a bunch of separate entries. I don't know why Binance doesn't just batch the orders together. So it's like, okay, what was my average fill based on me putting an order in, right? So it just goes all in and gives you all the little precise spots that you got filled, which is kind of annoying they don't consolidate or have the option to consolidate that. And you can see from there, what did SRM do? We spiked into it. We spiked in, spiked in, spiked in. And at that point, my stop level on this being 1280 and I had a smaller position, I would have potentially had more orders to get short in this range up into here, and then a stop would have been over that high a day at 1272, because I wouldn't want to see this continue to spike and potentially break out new highs, potentially just rip into all-time highs. So I definitely would not want to see that happen. So at this point, I would have had more entries to potentially short into these more spikes and then stop out if we broke out above that, right? Because you can't allow a parabolic move to squeeze you out of your short, because you will blow up your entire fucking account in a very short amount of time, or you're gonna get a margin call and they'll close the position for you and not even let you make a sound trade, because they're like, you're an idiot, you're fucking gonna lose your money and you might lose us money, so we're not gonna even get close to allowing that to happen. But fortunately for me, the market did pull back and SRM also absolutely ate shit, and now it's coming back down and retesting what? The 13 and 20 EMA, an area where we could potentially bounce, at least near term. Now, if the trend completely reverses, this could obviously go way lower, but from a stance of where we might bounce in a near term, right? We might hit this level down here and then bounce back up, potentially even go back up to my freaking entry price where I just go, okay, I just wasted all this time, and then come down. So for me, I want to lock in and take advantage of this nice spike to the downside and not have to go through the stress of potentially stopping out and giving back all my gains that I just made on this trade. And then I can maybe, if I wanted, potentially re-enter short here. But I probably won't, right? I took advantage of this spike opportunity into the previous supply zone where it failed to break out over the all-time highs. At that point, waited for that first failed spike and then saw the secondary spike into that level. In addition, my confidence was higher to go into that level because Bitcoin and Ethereum were also spiking into the resistance. Bitcoin and Ethereum, I already ate shit. I already had confirmation that we were in bear mode on Bitcoin and Ethereum. So spiking into the 13 and 20 EMA resistance, I was confident that this was potentially an area where we might then sell off again and spike down. And that's exactly what I was looking for on SRM. Okay, spiking in, Bitcoin and Ethereum look ready to dump. Any spikes on SRM I'm looking at as an opportunity to get short, and that's exactly what happened on SRM. You can see I'm actually still, my exits on SRM were 1270, 1280s, then getting out at 1061, 1060s, again at 11s, 1102, and I actually still have an open position, just a small position left on SRM, just 202 coins left, currently up 100% gain on SRM, considering the leverage size on SRM. So my ROI on the initial cash investment, not including because I think I had a 5x leverage position on SRM. So I'm up 100% on the cash investment on SRM. And so right now I'm just kind of riding this trend, because I still think Bitcoin could potentially completely dump here, right? We're breaking the 50-day moving average. I would like to see Bitcoin come back down into the 40K level, right in this range, right around here. And that's where I would potentially start considering buying, because we do have a nice support and demand level here on Bitcoin, basically kind of in this range right here, right? 37 to 40K would be where ideally I would like to load up on some longs or potentially cover more of my shorts into that level. It's hard to say. Maybe we just bounce and rip up to new all-time highs. We don't fucking know. There's no predicting, okay? We only react to what we see and try to trade as best we can and manage the risk from there. But anyways, guys, that's the trade on SRM. I don't exactly know how much I made on this, maybe about $2,000, because I only have a small position left and covered most of my gains near the 1320 EMA on SRM, right? 1060s was when I was getting out on the first level, 1060, and I also covered some more at 11. I didn't want to see it bounce off the 13 and 20 EMA and then rip back up to 1250 to 13 where I got in, and now we're still testing this area, which is also a bounce zone. So I have a very small position left right now on SRM, but for the most part, trade is basically done, but solid entry and exit on SRM going short.
Welcome to the dark side.
All right, guys, next trade on the agenda is SXP. Just another one from this list of screenshots here, 2,400. Now, I actually went and lost $2,400 immediately afterwards on this trade on SXP, so I gave that back, but I was even down about $11,000 in the matter of just 3 minutes on SXP. So just want to show you kind of the dangers of shorting as well. Thankfully, I got out of it for less than $11,000 loss, and now this thing's actually massively down, and I just made an additional like $7,000 or $8,000 on SXP. I'm actually currently still in SXP. I think I made about $10,000 on SXP. Actually, if we look over here, you can see my current open position on SXP is 6,000. I already locked in about 20 to 30% of this profit as this thing has got back in, but this is going to be for a separate video. Right now, we're going to talk about me getting my ass handed to me on SXP before we actually saw this massive pullback on SXP. First of all, that $2,400 gain, I've been trading this multiple times, so I can't remember exactly what it was, but basically what I was looking for on SXP was this massive run up into a potential supply zone that we started seeing here. Now, there was multiple supply zones that you could be drawing here, right? There was this initial first one right here that failed, and then all of a sudden this thing just ripped right into it. But the same situation is what I'm looking for is the Bitcoin. I'm looking at Bitcoin and Ethereum. Are these things going to potentially rip into a supply zone? And look what's happening with Bitcoin now, down about 5%, all bringing down new lows. Everyone's going to start panicking here. 13 EMA are starting to break down. Is that going to continue to pull back? We don't really know. But also, this isn't a good area to short either because we just saw a massive run down. We're in the major green zone here on the 15-minute chart. So would I suggest getting short here on Bitcoin? No. I would probably wait. Okay, what would I do is potentially set an alert on Bitcoin. Like, okay, if this starts getting back into the oversold area on the 15-minute chart, that's would be an area for to potentially re-enter into a resistance area here to then get short. But trying to get short after a massive sell-off, you're probably going to get burned because it's probably going to see some sort of spike back up or bounce off this area. But back to SXP, again, just translating what I see on Bitcoin and Ethereum into altcoins, going into the supply zone, right around also the significant area of a whole number, $4, right? So that's another major thing, $4, drawing supply zones that we have over here. We have multiple closing, this doji candle right here, and then the initial spikes up, right? The top of that doji candle was about 430. Then we have multiple closing and opening, same price here at about 407. So just really in this entire range, about 4 to 430 was kind of like the zone that I was looking at to potentially get short. And I did get short on this day right here when we saw that spike up, and that's when I made the $2,400 covered for profit on a spike to the downside. And you can see that push up and then just covered in that spike. SXP has been absolutely crazy. Every time there's a dip, there's just a massive spike. So I've been extremely cautious on this trade just because every time I've gotten short, it's all of a sudden just spiked back up and I've been instantly gone from a nice gain to a loss in a very short amount of time. And so I locked in a quick gain on that. And then I actually got back short prior to this massive spike happening. But we were going up here, and that was the candle here when we saw that spike up to 418 into that supply zone that I was looking at. And then I got back in short, I believe about 406 here on SXP. I started adding, and then I think I added again at about $4 right here after it looked like we were potentially continuing to pull back. Because prior to this happening, right, I was just looking at this. I'm like, okay, we're spiking this supply zone and failing. Then we're spiking up again. Then we saw the stochastic MTM back in the overbought range, right? And that's when I was like, okay, time to get in when we're spiking back on the 15-minute chart. That's a good time to start entering, just over $4 per share or per coin. And then all of a sudden, I wasn't even watching. I didn't have any stops in place, but my stop is essentially, okay, if we start breaking out over this high day or even right over this 410 to get early out, that would be potentially where I want. But I was just like, okay, I'm good for now. I just got in. It had been about 30 minutes or so. I have a stop in my mind, but I didn't have anything physical set because I don't really like setting physical stops. And then boom, massive spike. In 1 minute, went from about 404 to about 460, 458. And the reason for this was Huobi released a article here. You can see it says Huobi Global will list SXP on their exchange. Okay, so Huobi is one of the largest exchanges. As soon as that was released, all of a sudden a massive spike, short sellers got squeezed out, buyers came in and spiked this thing up. But again, with that spike going into this kind of supply zone, again, Bitcoin was in a major supply zone where I was potentially looking for a reversal. Still same theory. Translate what I see on Bitcoin and transfer it into the altcoins because they're going to react extremely similar. Not the exact same. Sometimes there's outliers that just fucking explode, but for the most part, they're going to mimic very closely whatever's happening in Bitcoin and Ethereum. So after that spike happened, I was in here and I look at my account. I'm I'm fucking down $11,000 on my short? I thought my entry was great. What the hell happened? And I look at this and I'm like, oh my dear Lord. So at this point, I just wanted out. I'm like, okay, I'm down $11,000. I just had these nice trades come in here, right? 8,000, about 7,000, 2,500. I didn't want to give back 50% of these profits all of a sudden. So at this point, I'm like, okay, the only thing I want to do now is get out of this for as small loss as possible so I can preserve the profits that I have. So I was hoping to see this pull back, and I looked at this, okay, I just kind of made a wild guess. And so I put an order to cover at 428. So I got out 428. It was negative 2,500 bucks. So I ended up losing between those two trades on here. I was just about break even. Okay, I was like, okay, if I can get break even on SXP, that's fine, whatever. Okay, and then I'll reevaluate the situation from there if I want to get short. But right now, all I care about is just not losing, not trying to swing for the fence and stress myself out by taking even a larger position and getting screwed over. I just wanted out for break even and then evaluate the situation from there. And so that's what I did. Got out for break even, and then at this point, I had an order to get back short at 436, and you can see the high here was 435.5, and I had my order about $75,000 worth because of what I wanted to see. Just like we saw many times before, when things break out over the high, sometimes a lot of people are like, oh, it's gonna break out, it's gonna fucking rip once it breaks out of these previous highs. Wrong. See what happens as soon as it broke over those highs multiple times? Slammed. You gotta think differently when it comes to short selling. A lot of times these breakouts in a overbought situation. If there's a breakout on a chart that looks great and it looks like a prime breakout pattern, sometimes, a lot of times, it's a good time to buy. But on a chart that had gone parabolic into a supply zone, Bitcoin's also in a supply zone looking like a reversal, the breakout might not be the best time to buy. Might be a good time to look at. If that breakout fails, get short. And that's exactly what I was trying to do here. Unfortunately, I missed that entry at 436. This thing slammed right down to 397 after that failed breakout to the upside. And I was like, okay, if we start reaching up towards the actual area where we get over the stochastic on the 15-minute chart, that's where I'll start entering. So I actually put an order in at 419 to get short again SXP, basically just looking at the supply here of this range of multiple closing prices on the 15-minute candle. So I was thinking, I was guesstimating that we would probably see a run up into that level, maybe 420. I didn't want to do a whole number of 420. I wanted to do 419 because I figured, okay, it might not get to 420. It might just get right up to 420-ish. And so I did 419. My order filled at 419. And then from there, retesting that breakdown zone, which is now resistance, came back up and then just got slammed from there. And it barely just spiked over that 40 level, right? I got an alert as soon as that did it as well because I set an alert to do that. If you want to set alerts over that, all you got to do is pick whatever time frame, get the horizontal ray out like this, set an alert in that level, click add alert. I think you have to have a certain account on TradingView to make that happen. And I got short. And then as soon as that did that, boom. And just the same thing here. Look at the, people probably thought, oh, it's breaking out over these previous highs. Breakout, nope. Slam as soon as that failed that breakout, okay? And then now this thing is down massively, down 6%, and you can see my open positions on SXP right now after getting short at 411 is my average because I did add a few times on this breakdown here, and again about 397 to get down in there, and now this thing's breaking down. Now I already covered partial of my position, as I said in my Telegram group here, right? So I said taking 25% profits on these shorts, which is SXP and RSR, and I'm short ADA currently, which at the time the profit was 5,800, and now the profit's 5,300 after already locking in 25%. So I think it's probably right now about $7,000 total profit on SXP. The same situation on SXP, looking for parabolic moves, spikes into supply zones, get short, but most importantly, also translating what's happening in Bitcoin and Ethereum to kind of translate into creating a trading plan on SXP. So that's what happened on SXP. This was crazy. Instantly up and down $11,000 to come out for a profit or break even on the first trade. And then now I'm up about $7,000 after breaking even on the first. Now I'm up about $7,000 or so on the trade right now. Probably gonna get ready to potentially lock in some gains as well again right here. That's it for this trade, guys. See you in the next one.
Welcome to the dark side.
What is up, guys? Today we're going to be taking a look at UNI short. Decent trade that I just pulled off. Not a huge profit, 2,600 bucks. I was in and out very quickly, but we'll take a look at what I was looking at on Uni while tracking Ethereum at the same time. First and foremost, let's just take a look at Ethereum, what we had going on here. ETH had been peaking out at these levels, forming up this resistance barrier in here. As you can see, we have the opening and closing price, opening and closing price, opening price on the daily chart. So a pretty big range of supply there that we can kind of have a gauge of, okay, things are going to jump up into that level potentially if we break down, and that would be a heavy level of resistance or supply that we can then be adding to our position on to go short, right? And as always, we want to be tracking what's going on with Ethereum to potentially getting short either Ethereum or potentially looking at altcoins that have also good looking charts to potentially get short on as well. So that's exactly what I was looking at here on Ethereum, and then just looking at UNI, USDT, similar pattern that we had going on here on Uni. I basically got in right around 30.45, I believe, and I was basically looking at this on the 30-minute to 1 hour chart. We had this level right around here where it peaked at about 30.40, even just looking at the 15-minute chart. Basically what I was trying to go, I was like, okay, here's kind of the reversal that happened initially before in that range, somewhere around here, and hopefully not break out over highs a day again, because that would get me in a sticky situation that I wouldn't like. But as always, there's typically a one last spike that happens, and that's why you never want to try to get in early. Like I said before, cancel your fucking trading plan and put your entry where you had your stop loss, because a lot of people probably got stocked out right here. But bam, what happens as soon as that fails to break out over that level, everyone that had their stop loss right here, now massive selling pressure comes right in, and this massive decline comes in on Uni. But that's all I was looking at, was tracking Ethereum over here, right? Ethereum at the same time, on the day that I was getting into Uni, Ethereum ran right up into that range, right? And that's basically at this time, that's exactly when I was getting short on Uni, was when we saw this spike into that level, which was retesting the supply zone on Ethereum. And so I looked at Uni. We can look at like the 15-minute chart here at the exact same time when that was happening, right? So we match up the crosshairs. What happened? The exact same thing. That's why we track both charts. Whatever's Ethereum and Bitcoin are doing, the other altcoins are basically doing. So we saw, just looking at Ethereum, that this would be a good range area to potentially re-go short. And at that same time, what was Uni doing? Same exact thing, getting into a level, which my range was kind of around 1340. It did spike to about 3080 for me going short here. And then this actually had this big spike to the downside, right? So I definitely did not want to see Ethereum get above this level. So my stops were basically like, okay, if this gets over highs a day on Uni, this might just keep fucking squeezing, right? Because we've been on this epic bull run, and it's easy for what you might think the top is, but it might not be the top, right? So you don't know. After Ethereum had already had that rollover on the first day right here, I was like, okay, clearly that supply zone is now going to be pretty heavy, and it's probably going to retest, but then crack. And see exactly what happened. Retested on that spike, and then just absolutely ate shit. And so it's good to understand what's going on Ethereum, but you have to have stops set, because once something goes parabolic, you might think this is the top here on Uni at 9, and then look what happens. It's at 44. So you can't just be like, oh, well, it's going to reverse at some point. You have to use stops. Otherwise, that will blow your entire account up, or you might actually owe your broker money, right? So we definitely don't want that. And I actually stopped out, or took a profit very quickly, just due to the fact that I had been trying to short Uni several times, and I did have several good profits on these big spike days, thinking it might be the reversal. So I was very quick to take my profit. I was basically just looking, okay, if this comes back down, retest this level here, where we had all these other levels here, right? Where this is obviously a clear level of support, but if it broke that, it would definitely see a decline. But I didn't want to take a risk of this bouncing right at that level and all of a sudden maybe get new highs, because it was also near the 1320 EMA support, which has been acting as a huge bounce level before. So I didn't want to risk just going right into a level where I have a nice profit and then just ripping back to all-time highs. So in my sleep, I had a buy stop set at about between 2870 and 2850 to just lock in my gains. Unfortunately, there was a huge drop right after that, about $3 that I could have, doubled my profit on Uni, but came out with a nice $2,600 profit on Uni, and now it's actually back down significantly and now kind of stabilizing. But that's basically what I was looking for on Uni, was a retest into that supply zone on the chart, basically judging by just following Ethereum, going in there and understanding that if Ethereum drops, Uni's going to drop as well, but it's going to drop faster and harder and in a larger percentage move. So I'm going to be able to make more money shorting Uni than I would be shorting Ethereum, because Ethereum might drop 5%, Uni might drop 10%. So that's the trade on Uni, going short, covering into a support zone on the intraday levels for Uni, right around 2850, getting in about 3040 with, gave up some profits all down here. But that's just the way the cookie crumbles sometimes, and that's the trade on Uni.